Dharamshi joins us on an afternoon which is working for all of us. It's an afternoon which caught everyone guessing, and it's an afternoon where Ravi should ideally be spending time with his family, but he's kind enough to join us. So Ravi, it's worth it, right? Budget one event risk is over. The markets have clearly pivoted in favor of consumption, and capex is taking a back seat. How should market read into this budget based on today's stock reaction?
Thanks for having me, Nikunj. And yeah, we would rather be at home than on Saturday working. But having said that, I think the way I look at this is that the Indian economy has been struggling, especially in the last quarter. And it became very evident that the moment the central government capex stopped for a few months because of election-related moratorium, suddenly the GDP dropped by 2%. That tells you that we had been firing only one engine of growth, which was the central government capex. Now, within the capex itself, the other two big engines are private capex as well as household capex. Household capex means the real estate. Those two haven't been firing yet. And on the consumption side, of course, there has been a lot of struggle post-COVID. We all know that it was the top end of the economy that was doing well, or an asset owner has done well, income earner has not done so well. The real wages are still pre-COVID level, below pre-COVID level. So there was a need to provide a relief and put some money in the hands of the struggling consumers. And I think this budget has done just that. So from the market's perspective, I am hoping that this ignites one more engine of growth and not at the cost of the capex cycle. Though a lot of people pay, a lot of emphasis on the central government capex number, but actually what matters is the private capex and the real estate cycle. The broad basing of real estate cycle and the private sector capex cycle is what will determine whether the momentum in the economy continues or no. So from that perspective, I'm hopeful that budget has done enough to sustain the momentum in the economy or revive the momentum in the economy to some extent.
After the budget, the narrative sort of weans out from capex related themes, or do you think it will still continue to be that decadal structural story? Because one didn't see a whole lot when it came to defense, railways, infrastructure, or at least not as per what the market was expecting maybe.
So yeah, probably the market expectations are running high, the valuations are running high. So from that perspective, there can be some consolidation or correction in the capex related theme. However, I just would like to point out that there are certain sectors which are heavily dependent on central government capex, which is like defense, railway, maybe roads. Those are the sectors which are more under pressure. But there are other private sector capex related sectors which can actually continue to do well. So there is a need to segregate within the capex cycle also. So there is going to be a change of hands in the capex cycle from central government towards private sector, and there is going to be a broad basing of the real estate from the premium end to the more mass and lower end of the economy. So those are two transitions that I'm looking forward to over the next 12 months.
Ravi, let's take a conversation back. And this is something which you prompted us, that look at where government is moving and just buy those. So government post 2021 started talking about capex. So defense did well, railways did well, solar did well, energy did well. Now the government is saying, I'm going to shift towards consumption. So is it time to reach into consumption stocks? It may not be FMCG, it could be travel, it could be hotels, it could be Zomato, it could be white goods. Because government is thinking differently. So is it time to act differently as a fund manager?
No, I would say definitely some amount of exposure. If the portfolio has not been showing some amount of exposure to consumption, then this is the time to be adding. We have incrementally been doing just that. We've been adding some names on the quick service restaurant side. We've added some names on the small ticket consumption items. So, but it has been incremental for us till now, and I would still, keep it incremental for the moment, because I am yet to fully assess the impact of this. One thing that bothers me in this particular budget is that despite this, rebate/exemption given up to 12 lakh rupees, they are factoring in a 15% growth in direct taxes. Now, if this is, I fail to understand where that money is going to come from. So if it is going to come from somewhere else, then probably that pocket might suffer on the consumption side. So early days to judge, but clearly the wind seems to be changing from capex related themes towards consumption related themes.
I'll talk about the macro backdrop here. The macro backdrop has been that up until now, whatever government has promised in fiscal deficit, tax assumptions, they all have been met very handsomely. I mean, एक ज़माना होता था fiscal deficit used to be an assumption and reality was different. There was a time when tax assumptions were high and the reality was different. For the first time, everyone is saying that the tax assumptions for next year are quite aggressive, given that you will be spending less and the size of the economy has become higher. Are we in for some disappointment on that front?
Yeah, so I mean, that's what I'm looking forward to. What exactly is going to be announced in the income tax bill next week or within a week, whatever the finance minister has proposed. I need to see what exactly is coming up. In the name of simplification, I hope it's not more of taxation. So those fears are not yet fully settled. Some doubts are still creeping in where that tax revenue is going to come from. Honestly, it's too early to pass a judgment, but that's where my worry or that's where my questions lie.
I'll prompt you with something where you want to be part of it or perhaps at least hear it, because the management of Zepto would be joining us in a minute from now after this question. My question to you, however, is outside the budget, which is that we've seen a carnage in mid and small cap stocks. We've seen almost a bloodbath in SME and IPO dominated stocks. Is the selling overdone? Do you think market now are nearing what could be called as a painful bottom?
So, see, the way I look at it is that the reason for the slowdown was one was government kept the fiscal very tight. Other was RBI kept the liquidity and regulation very tight. So on all these aspects, I think we are beginning to see some kind of leeway. So government has now started, well, the fiscal still remains 4.4, but at least there is some shift and some relief for the middle class and consumer. So that is good. And on the RBI side, I think we are beginning, already we have seen some actions taken on the easing the liquidity front. But on the regulatory front, we need to still see, and maybe the monetary policy that's scheduled next week should give us more insight into that. If those things are to be to happen, I think the intent of government seems to be to maintain the growth momentum and not to too hawkish or too much towards inflation or managing the balance sheet. So from that perspective, I think correction is what this is. Unlikely to get too much deeper unless we present a reason for the markets to do that. The worry still remains internationally, I mean globally, whether whatever action that President Trump is taking, will that result in any kind of a harm to Indian businesses or no? If that is not the case, then I would believe that this correction is pretty much done. I mean, I cannot rule out that one more round of selling or something, but I don't think we will be, crashing in a big way from here.
A lot of food for thought, Ravi. Always good having you on the show. Thank you so much for your time.
Thank you.